The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 18th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. You can call right now, 877-927-6648. If you can't call in, don't worry. We've got you covered. Got your back covered. You can always send me an email, steve@tfnn.com. Let those fingers do the walking. Inside that subject heading, please put radio show question. I'll be happy to take a look at what you would like me to look at, of course, inside the Tigers Den. Well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday, the eve of the Open. I'm looking forward to that championship. How great is that? And when you get up tomorrow morning at 4 or 5 o'clock, you'll be able to watch some golf overseas. Very cool. And anyway, this is Wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 70 points, 25,190 is the print. S&P's up 5, 28.14. NASDAQ 100 off 8 points. Russell 2000 is flat. Semis are up 10 points or 0.7%. Transport's on fire, up 221 points. That's 2.1%. Gold is flat. Silver's off 14 pennies. Light sweet crude up 36 cents, leading the charge to the upside. It is Granger, WW Worldwide, up 32 bucks or nearly 11%. Mercado Libre, another nice day, up $14 or 4%. ASML Holdings up $6.50. Berkshire Hathaway up 10. That's 5%. The B shares, you've got to the downside NetEase, NTES down $5.50, 2%. Clorox is off $5. Restoration Hardware, I believe that's what RH is, $5. Booking Holdings down 436. So there's stocks to look at. Of course, I want to look at what you want to look at, and that goes to our first question out here. So the first question came in, I believe it was yesterday late. It was from, I don't have it actually on my phone out here, so I'm going to paraphrase, but it was from Kevin S. Kevin S. was asking about the it heard that I said that what I saw in the charts were some topping patterns. His question was, well, what time frame? You know, what time frame? Daily, weekly, monthly, and so forth. And and it was a great question from the standpoint of being able to say, hey, let's make sure that we are clear with regard to our time frames. So I thought we'd go ahead and take the moment now. And again, we've reviewed some of these charts, but it never hurts. You know, the repetition is just simply, well, look, the patterns that you and I trade out here, they repeat all the time, and it's just a matter of whether we trust them and what type of confidence that we have inside them. So let's first take a look at the big picture, because if we get the big picture right, it makes it a whole lot easier to understand what maybe is going on under the covers, so to speak. So how do we do that? Well, one of our favorite patterns, yours, mine, many of the TFNNers, are the A to B equals CD patterns. In this case here, we have the Dow in the upper left-hand corner, the S&P in the upper right, the NASDAQ 100 lower left, the Russell 2000 lower right. All four of these are indices that you and I can trade through various different vehicles out there. what you will see, bigger picture, longer term, the Dow is in the process of forming an A to B equals CD to the upside. Bigger picture. Its next projection, its 1-to-1 level, is 27,251, or 25, basically 25,200 as we speak right now. Always have to remember, you got to always remember our A to B, our ABCs, don't we? Well, in the ABCD pattern, a 1-to-1 price projection only occurs 60% of the time. The other 40%, it is going to be a expansion. In this case, will it be an expansion? The answer is unequivocally yes, as we speak, on July 18th at 1:11 in the afternoon. If something changes tomorrow, I'll let you know. But in the meantime, where is the Dow headed to? Target number 1, 27,251. I can't tell you when it's going to get there. I just know that price is going to get there. And then it's going to move beyond that. Then it's going to move to the 30,480 level. Now, the 30,480 happens to be, there's two different ways that I can come up with that number out there. And so that is an eventual target as well. That's a bigger picture. That is the Dow. If we look at the S&P 500, it's 1-to-1 A to B equals CD pattern. Again, longer term is 3278. Will this likely do more than a 1-to-1 A to B equals CD? The answer is yes. That means its price target is around 3677. The NASDAQ 100, many people laughed when we came up with that 8,800 price target. You're trading at 7,400 right now. 8,800 seems like just a snap, crackle, and pop away before that occurs. However, that is not the extent of the move inside of the NASDAQ 100. That just happened to be an initial target. But 7609 is the 1-to-1 A to B equals CD. We are at 7,400 right now. 200 points inside of the NASDAQ 100. That could take place by tomorrow, mañana. I'm not saying that it's going to, but it is just around the corner. And then we're off to the 8621 level. If we take a look at the Russell 2000, the 1-to-1 price projection, longer term, 1896. Peak D in the den asks the question, a very astute question, and says, Steve, do all A to B equals CD patterns complete if the B point is passed? No. There is no pattern that I'm aware of that we can give you a 100% works all the time out there. But what we do know is when that B point gets passed, with and sometimes without volume, what we do is what we have here is we have measuring tools that give us price projections. But here's what I can share with you, Peak D. And I can share this with so much conviction that to doubt it says go back and prove it to yourself then. And that is this, with regard to the Dow, because my data goes back to 1884, I believe it is. And I can share with you that there is one pattern. It's called the Rhodes Momentum Indicator Signal. That pattern has been present inside the Dow before every bear market for the last 130 plus years out there. It is not present right now. That says to me, these A to B equals CD patterns that are underway, they're going to complete, and they're headed higher until the market communicates something different to us. So Kevin S., bigger picture, these markets want much, much higher price. We'll be right back. A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator Signal that subscribers now use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're taking a look at the big picture because Kevin S. sent in fact, the only message or the only question that we have so far, and was asking about the top-end patterns that I was seeing, was really asking about time frames. And what it did was it just struck me and said, look, I can't share with you enough, I believe, how important understanding the big picture is. Now, the reason is because most of us have retirement funds that we are managing, and sometimes I get the question when I talk about market tops, and people say, well, should I lighten up in my 401k plans and so forth? Of course, it always depends on what it's invested in, right? And we talked about that a little a couple of days ago. But let me just keep on track here, because I know that there are many folks out there that just say BS. Before Steve just told me that, how can you say there's all of these problems out there? Tariff, schmariff, you know what we think about that. You know, the markets are overpriced. You've got 4 stocks that make up all of the returns, all of that. What can be classified as hogwash, just stuff to maybe keep you on the sidelines or scared out here. Look, this chart really tells it all. If you're asking yourself, well, how is it that the NASDAQ 100 is going to get to 8,800 or 9,900 or wherever it is heading to? What is the emphasis behind that? And it is right here in front of us. The reality is, whether your name is Kevin, your name is Steve, your name is Stephanie, or your name is John, it doesn't really matter what your name is. You have a counterpart that is looking at this screen in their local currency. You are not the only one, I'm sorry to tell you this, you're not the only one that trades the QQQs or the QID or the QLD or the TQQ or the you name it. You're not the only one. You have a relative, a long-distance cousin, a fellow trader that is sitting over in the UK that has a responsibility with their portfolio, whatever it is they're managing, and many of those are just simply momentum traders, and they're saying, hey, what's breaking out? Where is the momentum? That happens to be, well, if they're in the UK, they're in London, they're primarily looking at the very right panel, the NDX in pounds. We're looking at a yearly chart out here, but it really paints the picture. You can see we're trading up at its highs. You can see that anybody looking at a screen of the NDX in their local currency being pound sterling sees it's breaking out. This is emphasis. They're buyers. They're not sellers. If you happen to be sitting over in Tokyo or Osaka or Kyoto or Kyushu or Hokkaido or wherever it is you are sitting and your local currency is yen, you are buying the NDX 100. Why? Because it is breaking out in that currency too. They are not sellers. I'm looking at the larger picture. There are not sellers. There's no one opposing the market moving higher or the Qs inside of Japan. And then we go over to Paris, or we go over wherever it is that you want to go. You can go to Italy. You'll be drinking a nice, what do we want to drink? Let's drink a nice Merlot, right? Nice 100% Italian Merlot out there. I can think of a few that I would like to have. And those folks that are trading in euros are saying the place to be, other than in Italy, is inside the NDX 100, or really is inside the U.S. markets. The reality is money around the world has to flow somewhere. And what money's looking for is where are things moving higher? You got Jim Chanos. You got a handful of folks, that are just stuck into short selling out here, no matter whether they're getting creamed or not. That's not the point. We're taking a look at the U.S. stock indices. We're trying to get the big picture. We're trying to understand the answer, where the market's headed to longer term out here. And you can and you want to understand where the money is flowing. Here's one thing for sure. The money is flowing into the U.S. markets. We can go look at the same thing inside the Russell, inside of the S&P, inside of the Dow. Ask yourself the question. If you were sitting over there, you were talking to your cousin, your long-lost friend, your drinking buddy, whoever it might be over in Europe, whether they're in London, whether they're in Italy, or maybe they're just sitting over in Tokyo right now, and you guys are all trying to come up with what's breaking out, where should we invest our money? What would you say? Well, how about if we said, well, not so fast. Let's just say we took the Lee Corso approach and said, not so fast. I want to know what's going on in Australia or Brazil or Canada or China or France or Germany or Hong Kong or India or Israel or Italy, Japan, Mexico, Poland, Russia, Saudi Arabia, Singapore. You see, we've got all of these countries out here on this chart. This is Stevie's Bob system, bullish or bearish. It takes a look at the award-winning tools and signals that I use in order to be able to generate that #1 market timing ranking, right? Look, many of you have been here. You've been at TFNN for a long time, so you've seen me from when I started to where we're at now. Do you really think when I started, I could have gained or garnered that #1 ranking inside of Timers Digest? Are you kidding me? Not a chance, and you know what? But that's different now. That's different after all of these years of creating tools, of looking at these markets, of being able to get my head screwed on straight to understand what is the most fundamental elements of what buyers and sellers are communicating to you and I, and all that has been incorporated into the system so that in a heartbeat, I can't go look at all these charts, a daily, a weekly, and a monthly. I mean, I can, but can you imagine the time it takes to try to understand what is their market position? What is their market outlook? Look at all of these countries. Look at them on a daily basis. How many bullish signals do you see around the world? Please tell me, where is it that you're going to put your money? Now, if somebody said Australia, I'd say, yeah, Australia looks like a good market as well. Certainly with regard to the Rhodes signals out here, it's bullish or it's in a consolidating bullish mode. So, yeah, I'm good there. Brazil, no way. Canada, maybe. China, maybe. Depends what it is you're investing in. France, I don't think so. I don't think so. Germany, I don't think so. No momentum there. Just go through a list of each of these countries out here. The United Kingdom, I don't think so. So if you're sitting over in those countries and you have to put your money to work, where are you going to put it to work? Are you just going to stay in your own stock exchange? Is that what you're going to do? That's not what you're going to do. Because as you and I start to see shifts of money flowing to other countries, those are the ETF structures or what have you that we should be shifting to as well. So here we've got the worldly view. Here, when we take a look at this chart, we can see where money is flowing to all of the major currencies out there. So that's the big picture. But I know Kevin, and Kevin wants to take a look at the smaller picture out there. And inside the smaller picture, well, that's where we see potential market tops out there. And as strong as this NASDAQ is, as strong as it still is in the process on a much shorter term. Right now, we're looking at the 5-hour time frame chart. On a shorter term, is giving us a topping signal. Will this come to fruition? There are certain levels that price has to close below in order for that to occur out there. We'll take a look at it. But a 5-hour chart has nothing to do with a yearly, a monthly, a larger quarterly term time frame chart out there. Longer term, the markets are headed higher. No bear market anywhere in sight in the U.S. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 73, S&P is up 5. So now we're going to change it up. We're going to go to the short-term time frame out here, because we've taken a look at it. I beat that dead horse to death out there. But perhaps the most important segments are those last two that we just did out there in order to really try to understand what the markets are doing and why. In the shorter term, and by shorter term, we're just simply going back to a 5-hour time frame. You might say, why a 5-hour time frame? I'll show you. So at this stage here, the exact same pattern that has preceded every bear market in the Dow, which does not exist right now, on the time frames that you would use to identify that, okay, is the same pattern that you and I can use to time the markets and try to time when the markets are communicating to you and I that they're making a high out here. That's the pattern that has going right now inside of the NQ. So you can say, my God, Steve, you just told me just how bullish and all the money that is coming in there. Yes, it doesn't mean that markets aren't going to move higher and lower, especially on an intraday-ish type time frame. What's the number to be watching inside the NQ? Pretty easy. 7394.18 as we speak right now. If we get a close below that, we're going to see a pullback. A pullback to where? About 72.50. That would be the place that we would be looking for. Would that be the end of the move on a retracement? I don't know. I'd have to take a look at it as price was moving back that way. Do we have the signal that that's going to occur right now? Not until we break through a level of support. And that support is 73.94.18. It must close below that level. That number can change because a brand new profile could form. I don't control when they form. I just know what to look for when they do form out there. At this stage, that level has been tested. It has been rejected. The pullback we've seen intraday was nothing more than a test of support. Now, this is what the current same set of patterns that led to the number one market timing that were preceded every bear market in the Dow. These are patterns worth noting. So instead of looking at this chart here, because it gets a bit noisy, here's what I can show you. Here's why I still say that as we speak right now, the NQ is in the process of forming a top. Will it come to fruition? I don't know. This pattern can be violated. For example, let me go further back on the left-hand side out here. And you can see here's the same pattern. Even though I don't have it marked, you can see back here right around November the 28th out here, that pattern was present. It created the top inside the NQ, then created the bottom out here at around December 5th. Here's a pattern that began to form. This began to form at about 4 o'clock in the morning on January 5th, but it never confirmed. So the patterns that are there is a way to resolve this to the upside. Price can keep moving higher and the pattern will just simply disappear out there. That's why certain levels of support need to be violated. When they're violated, what happens then price can start moving lower. As an example, inside the NQ, back on January 28th, that pattern began forming. When did we get an actual confirmation of a move lower? When support was broken. February the 2nd. We're talking about the beginning of this forming on January 28th. It took days to form. It didn't take days to form when the bottom formed out here with that same pattern on February 9th. Here's another top that occurred. This is on March 13th. It took a while. It took a while. When I say March 13th, it took till the 18th to go ahead and give you that confirmation out there. So here you can see these patterns. Another previous high. This high out here on May 14th really never, it did confirm. It confirmed for about 3, so it's about 10 hours. And then it just rejected those lows and said, hey, I'm in a consolidation out here. So when we take a look at how markets make tops and markets make bottoms, and they work really well right now, this is like surfing. And so what you and I are surfing around for, this is what Bob is so helpful, because Bob, the bullish or bearish, the Stevie Rhodes system out here, can go take a look at multiple instruments, multiple time frames, and come back and report to us, hey, you need to go investigate this issue out here. May be a problem. And what we know is that this 5-hour time frame is if you're surfing the big waves out here, you're paying attention to this. So as we speak right now for the NQ, where all the money is poured into and everything on the bigger picture, it's still showing one of these topping patterns. Is this something on a short-term basis that you would want to ignore? I say no. Can this pattern evaporate and go away? Absolutely. and there's a level of support that has not failed. So, Kevin, I hope that that helps really answer your question. There weren't a lot of questions that came in. There's a couple inside the den, but I just thought it would be helpful for me, at least. Maybe it wasn't helpful for you, just to kind of walk through what we're looking at inside the markets, what the bigger picture is out here, and patterns and tools that you guys can use. And look, and if you're not familiar with this, you can join me. Look, we're not going to do this again. When I say do this again, if you've previously been a subscriber of Mastering Probability, you typically get the advantage of the 30-day money, no questions act, money back guarantee. You've got that until tomorrow at about 4 o'clock in the afternoon. So whether you've been a subscriber or not, you can come gain access for the next 30 days. You can see Bob at work. You can see these tools. You get access to a number of workshops. You can join me tomorrow at 4:15 for the Ninja Trader workshop, but you have to sign up for that separately on the homepage of TFNN.com. We couldn't make it easier for everybody out there to arm you with tools and information so that you can go on and be the #1 market timer. I'm telling you, if I can do it, well, then I know you can do it out there. So, join me, learn these tools. They're extraordinary tools for being able to time whatever it is, whatever instrument it is you trade, and assist you with the markets. There's other tools, which I won't go into during tomorrow's workshop, but one that was asked about was if we would take a look at the spot volatility. The next question is, please review the VIX daily chart and what would signal some sort of tradable decline in the S&P 500. And the VIX is an extraordinary tool. That happens to be the bottom of the page. So the bottom of this page is the spot volatility index. The top of the page is the S&P 500. One of the most extraordinary aspects about it is its relationship to its 50-day exponential moving average. Right now, that 50-day level is 1418. When price trades below the 50-day exponential moving average, the S&P 500, for the predominant most part, for 80 to 90% of the most part, the S&P 500 is going to move sideways to higher. Why is it? I don't have a clue. None, zero, not a zip, zilch. I just know that it does. You don't have to believe me. If there's one thing that you can do, you can go prove this to yourself. You can put an S&P chart on your screen. You can, on a bottom panel or something, put a spot volatility index. Just put the 50-day exponential moving average on the volatility index, and you tell me, as price is moving and closing over the 50-day, is that a signal to go short the market? That would be one signal. That's really not what this trader is looking for, because they're looking for some type of earlier warning mechanism. But nonetheless, that would be one. There are two blue lines that are on this chart at the bottom of the page in the spot volatility index. Those are called Bollinger Bands. Many of you have used Bollinger Bands. Many of you that use Bollinger Bands just simply use the default, which is what, 22, a two deviation, and a 20 period. Change it to 50 and 1 for a change, at least with regard to the spot volatility index. When it's trading down to the bottom of that band, that's where tops can form. But then we need other signals, like the 5-hour chart. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the question was, is there any tools that we can take a look at in spot volatility index to give us a signal that a top may be forming? In my opinion is you have to, what I've learned is that you have to utilize the VIX as not a single tool, but a combo out here. One of the things you're looking for as a signal from the VIX that a top is in process of forming is a rising VIX. And the way that we like to do that is we like to take a look at closing prices out here. So I've taken the bottom panel, instead of using the candlestick charts out there, I've just turned it to a line chart. And what you'll notice is that when the S&P makes tops out here, you will typically, not always, but you will typically see a rising VIX. What do I mean by that? On a closing basis. Let's use a red line. We got a red line. Here we can see, did I use the right one? Let me grab it. So here, it's a little nuance. But it's a great little nuance out here. So there was a slight rising VIX for a couple of days out here. See this little red line? Now let me just move it away from here. On a closing basis, the VIX was closing higher, but the S&P 500 was moving higher out there. That's a signal. Do we have that? First, do we have that now? We do not have that pattern now. If we take this pattern all the way over here, take a look at from about the trading day of June the 6th. So from June 6th through June 12th, what we had was a rising VIX in the face of rising price in the S&P 500. It is a diverging pattern that is a signal that the S&P 500 is topping. I think that was the question. Do we have that now? And on a closing basis, the answer is no. We do not. Did we have that as the S&P 500 was making its high back on January 26th? Heavens to Betsy, for goodness, we did. Take a look at this. Take a look at that rising on a closing basis spot volatility index in the face of rising price inside the S&P 500. So when you see that, it is a signal. The question is timing. That's where you've got to use those other tools out there, such as that 5-hour time frame chart. Inside of the S&P 500, as an example, let's pull this back here. As an example, what was going on back in January? I actually don't know the answer to this. Let's go find out. Can I find out? Yeah, actually, the S&P 500 did on the 5-hour time frame did not have that pattern, but the Nasdaq did out there because we just took a look at that a short bit ago. But the actually the ES Min on a 5-hour time frame chart did not have that pattern. So hopefully that helps you out. By the way, with regard to the S&P 500, I know that my e-signal system for calculating its bars out here did happen to make a wave number 7. We are in wave number 7 as we speak right now. So for those of you that are wave traders, wave surfers out there, you've got wave number 7 inside the 5-hour time frame chart. Let's go to Mike from Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you today?
Doing pretty good, Steve. Steve, I got into J&J a bunch of days ago when it was around 123, and we got that big spike up yesterday because of the earnings, and it seemed to have sold off, and now it looks like we're dipping into the gap. I had a sell order at like 132. I thought it might hit the previous swing high from a while back. What do you think?
So you got it a couple days ago. Was that like a couple days ago, July 16th, or before?
It was when it was trading around 123.
Okay. So, and when you got into this, you say you had a target of 132. At 132, you were out. That was your sell order that was in place.
Yeah.
So it was just a short-term trade out here.
Yeah, I thought maybe like in a week or so, possibly get up there and test that area.
Yeah. Okay. So you got a profit in this thing. It moved much higher yesterday, 12.8 million shares, and you're pulling back with light volume. There is nothing because it's trading inside the daily box out here, which means below 128.21. That would be a level you'd be looking at today. If it closes below the top of that box, 128.21, it would be normal. It would be natural to pull back to where it broke out, whether that's the beginning of the gap, which would be 126.10. Whether it's the bottom of the profile, 124.74, or whether it's Stevie's red line, it's not shown here, it's on another page of mine, is 125.80. A pullback on light volume to those areas would be natural. And so the question would be, so if that's the case and it's going to pull back to those areas, what would Mike do? What are you going to do if that's what's going to occur?
Well, as long as it won't violate the uptrend and it's still at that point looks like it could get up to like around 132, I'd hang on for the ride.
Okay, so I'd say that at this stage here, your benchmark is you don't want to see this pullback with more than 7.3 million shares, and that's as it's moving into the July 16th area, the bottom of that profile. If it does, you probably still have a small profit. I'd likely say take that small profit at that stage. Here, it was just a trade. I'd say to the best of your ability, don't let a winner turn into a loser. You can always, if you bought a decent-sized chunk of shares out there, you can always take some profits now. You can wait to the end of the day, because if this does close above 128.21, that would be short-term bullish for sure. So it looks pretty good, but look, J&J could easily pull back, and right now I'd say 125.81 is not out of the question, and still remain bullish out there. All right, Mike?
Okay, and one other thing, too, is the webinar tomorrow, will that be archived?
So the way that it works for the webinar, you come over to the homepage of TFNN.com, you sign up, and it's going to take you to the NinjaTrader webpage for signing up. You give your first name, your last name, and an email address. If you can't attend, because it's being hosted on their system and everything, all my charts and everything are already on their system. If you can't attend, then what they are supposed to do is send you a link so that you can watch the archive. But the folks at TFNN, we don't have any control of that. The last time I did a workshop for NinjaTrader was a couple of years ago, but that's the way that it's supposed to work out there, and I'm pretty sure that it will. But just you got to make sure that you sign up. If you're, just signing up and being a TFNN member or a newsletter subscriber member won't get you access to that email that would come from NinjaTrader.
Okay. Well, thank you very much, Steve.
You bet. And best of luck with Johnson and Johnson, ticker symbol there, JNJ. There was another question inside the den. LPTH was the ticker symbol, Light Path. LPTH. And what was the question? Do we mind going over that? LPTH, I think that was the question. It's this individual's favorite stock in at $2, and this is trading right now at 264. So this has had a nice move today. And the question is, kind of like Mike, was identifying the prior swing point. In this case here, there's a couple places that we can take a look. And right now, as your pilot, I'm not saying the oxygen masks because I'm not vaping, okay, inside the this little, office, beautiful office of mine. I'm not vaping. And the oxygen mask may not be falling down, but you are about to run into some turbulence. And that's all those guys and gals that bought on November 10th, 2017. 2 million of them that were just saying, please, I just want to get my money back between the price of 273 and 340. That's what you're up against. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So just check my emails. Sundry of questions out there. My apologies for being such a blowhard today out here, but it is what it is. Now, what I will do is everybody who sent in email requests, I'll make sure that I write those down so that tomorrow during the show, when I'll get right to them, I'll go right through each one of those. One that came in that I can get to, the first one that came, and I'm just doing this based on priority seating. That came in from Earl W. And Earl was asking about a ticker symbol HK, Halcon Resources. And he said it just made a new low. Do you ever buy off the new low list out here? Here's what I would suggest. Doesn't matter to me whether it's a low or it's a high. Here's the daily. What we do buy is completed patterns. So in this case here, it just depends on the pattern that you're trading. In the case of Halcon, if we just take a look at a possible A to B equals CD pattern that is underway right now, you can see that it made the 1 to 1.272 A to B equals CD. The B point, which Peak D had asked about earlier, had 5 million shares. It was passed with 4 million shares, lighter volume. Still went ahead to complete, in this case, more than the 1 to 1 A to B equals CD. But what I want to show you out here, Earl, is this can easily travel and make a new lower low, because what you do not have right now is the cavalry. You do not have a bullish reversal signal. At a minimum, at Stevie's minimum, the way that the market communicates to you and I is through bullish or bearish candlesticks. This is the language of the markets. You should really know your candlesticks out there. Why? Because when you see a bullish candlestick, it is at least a sign that the buyers are trying to form a bottom. Whether they will or they won't, I don't know, but it tells you that you can get in on the fight. Until you see a bullish reversal candle and a doji, which is where we're at right now, I don't know where it's going to end the day. Could be a hammer, but right now it's a doji. That you don't have the bullish reversal signal. The other thing you want is Stevie's red line. I will tell you, on HK, that level is $3.83. So if you like to buy lows, no problema. Wait till it completes the pattern. Wait till the bulls show up. Wait till price gets back above Stevie and Earl's red line. Thanks, folks. Stay tuned. Your favorite polar bear, David White's up next. I'll see you on Terrific Thursday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.